China's appetite for metal ores and other resources is on the wane. Brazil is in recession and Russia is in crisis. Have the BRIC countries gone from economic boost to burden? With me down the line to discuss is Kilian Reber. Kilian, what do you make of the suggestion the BRIC downturn could create an EM-induced recession for the global economy?
Well, let me start by saying that we're still quite far away from a global recession right now. At More Than BRICs, we think global GDP growth will be around 3.2% this year, and of course, a large part of that comes from the U.S. economy. But it is clear that the slowdown in emerging markets does have an impact on the developed economies, right? The BRICs make up 1/5 of global GDP, and with the slowdown, particularly in China, in Russia, Brazil, we think this will shave off around half a percentage point of global GDP growth compared to the last few years.
The floods of funds which made their way to EM economies during low interest rate environment amid the financial crisis seem to have turned the other way, back to safety. So why the change in rationale?
Well, I think the market is re-rating EM assets because of a more challenging economic backdrop. And in my view, there are three key reasons for this. First, we have sharply lower commodity prices since this year, which of course are putting commodity exporting countries, of which there are many in EM, under pressure. Second, because of this, of course, most EM central banks are happy with weaker currencies, and this of course makes investments in EM in dollar terms less attractive. And I think thirdly, we shouldn't forget that the Fed's upcoming tightening of monetary policy will probably further squeeze liquidity for EM assets. So I think many investors are now looking to the US for better risk-adjusted returns because of these reasons.
You mentioned the US. Tonight the FOMC meeting kicks off. Some analysts say the collapse in trade is a much bigger threat to these BRIC nations, much more dangerous than the prospect of the Fed raising rates. Do you agree with this?
I do agree in the sense that the sudden drop in exports, which we've seen in the BRICs, which is of course linked to much weaker commodity prices, has come as a big surprise for many emerging markets. So just to put this into perspective, the BRIC exports are down 16% compared to last year. And this is quite a massive drop in exports here. Compared to this, I think the Fed tightening has by now probably become one of the most predictable events. And I think this should pose less of a risk to emerging markets when it happens. So to answer your question, I don't expect emerging markets to collapse because of weaker exports. Because weaker currencies, and this is something which we see across the board in EM right now, they help to buffer the impact somewhat.
Some of these countries have tried to help themselves through diversification. South Korea have joined the monetary policy bandwagon, but Brazil, for example, doesn't have much room for fiscal or monetary stimulus. Do you think moving towards the creation of a single market in trade and economic cooperation is the answer?
Well, I think it can help a little bit, but, just like this hasn't really been the answer for the European Union, I think it won't do much for emerging markets either. I think what's really needed in all of the BRICs are structural economic reforms. There's no way around it. And these reforms weren't started when EM economies did relatively better. Now, of course, it's politically even harder to pursue them, right, when we have a major slowdown. On the positive side, I think, the readiness for these reforms grows as the level of economic pain increases. And we already see, of course, some of these reforms in India and China, a little bit in Brazil, and I think we might see more of that.
And lastly, could you tell us your outlook for some of the BRIC currencies, please?
Well, as I mentioned before, I think those BRIC central banks that can afford to cut policy rates, they will do so. So those are essentially China, India, and Russia. And I think the most aggressive will be Russia because inflation is set to fall dramatically in the second half of the year. They just cut rates by 100 basis points yesterday, and I think we'll see more of that. And, of course, policymakers are happy with weaker currencies right now with the export downturn. So all in all, I think we'll see the BRIC currencies trend on average 3 to 5% weaker towards year-end. And I think the ruble and the Brazilian real, they will do somewhat weaker than the others, and the Indian rupee will be somewhere in between. And I think the Chinese renminbi should be around flat because, of course, it's the most managed of these currencies and therefore the safest right now.
Kilian, thank you. Well, that's all from Kilian and myself, but also today we have Commodities Corner, Industry Catch-Up, Press Review and much more, so please do keep clicking back. Goodbye for now.